Welcome back to the channel. Today, we're diving into the fascinating and turbulent world of cryptocurrency. If you've been watching the markets recently, you might have noticed some big moves, especially after the latest Federal Reserve interest rate decision. Stick around as we break it all down for you: why the market is reacting this way, what's happening behind the scenes, and what it all means for your favorite coins like Bitcoin, Dogecoin, and beyond. Let's get started. First, let's address the elephant in the room: the Federal Reserve's 25 basis point interest rate cut. Normally, this would be a bullish signal for cryptocurrencies and other riskier assets, as lower interest rates often encourage investment in higher yield opportunities. But this time, things didn't go as expected. Instead of celebrating, the crypto market took a nosedive, with most coins dropping 8–10% in value. So, what happened? The issue wasn't the rate cut itself, but rather a statement made by Federal Reserve Chairman Jerome Powell. He explicitly stated that the Fed is not allowed to own Bitcoin. This remark sent shockwaves through the market, creating a wave of uncertainty and doubt about the regulatory environment for cryptocurrencies. The immediate impact of Powell's statement was evident. Bitcoin dropped to retest the $100K level, a critical support zone. This pullback dragged altcoins down with it, as is often the case. For instance, Dogecoin fell to 36 cents, teetering dangerously close to its next support level of 32 cents. If it breaches this zone, we could see even more panic selling. Interestingly, trading volumes tell a different story. Despite the downturn, trading activity remains strong. Dogecoin's trading volume surged to $5.6 billion, up from $3 billion the previous day. This indicates that while prices are falling, market participants are still very much engaged. One of the factors stabilizing Bitcoin above six figures is the presence of whales. Large investors have set limit orders to prevent Bitcoin from falling below $100K, showcasing their confidence in the long-term potential of the asset. Additionally, institutional interest is growing. BlackRock's Bitcoin ETF, for example, has already amassed $57 billion in less than a year. To put this in perspective, their gold ETF took 20 years to reach $33 billion. This rapid adoption highlights the increasing attention and legitimacy crypto is gaining in the financial world. Why did the Fed cut interest rates in the first place? It's all about controlling inflation. Lowering rates helps stimulate economic activity, but it's a delicate balance. Powell's statement that future rate cuts will happen at a slower pace added another layer of uncertainty. Slower rate cuts are less favorable for cryptocurrencies, which thrive on the liquidity and risk appetite fostered by rapid monetary easing. Looking ahead, many analysts, including those at Bitwise, predict that Bitcoin could reach $200K by the end of 2025. Some even argue that $250K is a more realistic target, especially if we see a strong bull market phase. This optimism stems from increasing adoption, institutional involvement, and the potential for more favorable regulatory developments. Let's talk about Dogecoin, which is in a precarious position. Currently hovering around 36 cents, a drop below 32 cents could lead to a significant downturn. However, the long-to-short ratio still favors longs, indicating that many traders are betting on a recovery. Open interest in Dogecoin stands at $2.4 billion, down 11%, but it's clear that traders remain committed. On the advocacy front, Michael Saylor is doubling down on Bitcoin. He's even offered to advise former President Donald Trump on crypto policies. Trump's involvement could be a game-changer, especially if his influence leads to more crypto-friendly policies in the U.S. Meanwhile, Crypto.com is taking legal action against the SEC, signaling a growing pushback against regulatory hurdles. As more pro-crypto voices emerge, the regulatory landscape could shift in favor of innovation and adoption. On the technical side, Ethereum continues to see groundbreaking developments. A $1.5 trillion bank is building a Layer 2 blockchain on Ethereum, further solidifying its position as the go-to platform for decentralized applications and enterprise solutions. This kind of adoption could drive the next wave of growth in the crypto market. It's not just crypto that's feeling the heat. The U.S. stock market lost $1.5 trillion in value on the same day, reflecting broader economic concerns. This correlation between stocks and crypto underscores the interconnectedness of financial markets. When fear grips one market, it often spills over into others. Despite the current volatility, many experts view this as a golden buying opportunity. With Bitcoin holding above $100,000 and institutional interest at an all-time high, the long-term outlook remains positive. Dogecoin, while risky, could also present significant upside if it manages to hold its support levels. Remember, investing in crypto is not without risks, but the potential rewards can be immense. As always, do your own research and invest responsibly. Thanks for watching. Don't forget to like, share, and subscribe for more updates on the crypto market. Let us know in the comments what you think about the recent market moves and where you see Bitcoin heading in 2025. Until next time, stay informed and stay invested.